Former President of the Republic of Cyprus, Honorable High Commissioners, Honorable Ambassadors, Honorable Members of the Parliament, Mr. Rector, Vice Rector, Honorable guests, distinguished guests, ladies and gentlemen, dear students, on behalf of the School of Economics and Management of the University of Cyprus, I'm very pleased to welcome you all to this special event. An event which is really contemporary, and we're very pleased that we have three distinguished speakers, CEOs of the three biggest banks here in Cyprus, Mr. John Hourican, Bank of Cyprus, Mr. Yannis Matsis, Hellenic Bank, and Mr. Nicholas Hadjiyiannis, Coop Cyprus Bank. It is indeed an honor that we have you here, that you're going to talk and provide your insights on a very interesting topic, on issues which relate to risk, challenges, and policy implications of three of systemic banks here in Cyprus. I'd like to sincerely thank you for accepting for a second time our invitation here. When I was preparing my speech, I was going to say, why is it important to have every year this type of an event? But I think you saw what happens. Either you have done a great job last year, or since last year, something happened very important, and all these guests came to listen to you. I believe it's a combination of both. Last year, as you remember, right before this presentation, we had some good news from Standard & Poor's. Few weeks before the presentation, Standard & Poor's upgraded the economy of Cyprus, and they gave some positive signals as far as the Cyprus economy and the banking sector is concerned. And few months later on, both Fitch and Moody's upgraded the Cyprus economy as well. They said very, very positive things as far as the economy of Cyprus is concerned, as well as about the banking sector. But there is something to be done. Several of us expected that the Cyprus economy will be upgraded to an investment grade, and we expected that a few weeks ago. It didn't happen. They said positive things like the banking sector has improved substantially. In the past few years, we passed the stress test. Capital adequacy ratios have improved substantially. Liquidity improved substantially. No ELA from the Bank of Cyprus. But even though NPLs have improved, you remember once, a few years ago, we had more than 27 billion. Right now, slightly above 18 billion, which is approximately 43% of the total loans in Cyprus. So there are various challenges as far as the Cyprus banking system is concerned. And I believe the two major ones, of course, they are going to provide insight. The three CEOs could relate to the NPLs and something that all of you pay attention in the past few weeks. What is going to happen with Coop Cyprus Bank? So the center of attention may be my friend Nicholas Hadjiyiannis. So there are various unanswered questions that I believe the three CEOs may provide answers to all of you. One of those, it relates to, is our banking system at the level that we want it to be? And if not, why? What's going on as far as NPLs? Why are they so high? And what should happen in order to mitigate this kind of problems? We had various restructurings. Have they been successful? And if not, why? Of course, when you talk to the CEOs and to the bankers, they say, not everything is under our control. Something is beyond our control. That's why NPLs, they may not be going down as we should have expected. And few things may be under the control of those that they govern us. Legislation. Is the legislation of what we expect to or not? And as far as foreclosures is concerned, have they done as to what we expected them to do? And what is the cause of this lack of legislation? Some of us, we may believe that the lack of legislation affects slightly or some of the banking sector. But I'm sure the three CEOs, they may go a step further. They say it affects or it may affect the whole economy. Something else which relates to the government. Do you believe that there is too much political intervention here in Cyprus in the banking system compared to other countries that you have experiences, Ireland and other European Union countries? So these are some unanswered questions. And if you have listened to some speeches of the three CEOs in the past few weeks, there is some additional issues as far as the banking system is concerned. And among those, what happened? And among those, anyone? Okay, thank you. I'm sorry. And among those issues that you raised as CEOs was the banking sector in Cyprus may be too big for the size of the Cyprus economy. But why is it so big? It used to be much bigger. You remember, in 2012, it went down. But you state that again is too big. Why is it? And what should be done in order to be more efficient, more effective, and more competitive in this highly competitive environment? Some of you mentioned about mergers and acquisitions. I don't know what you meant about that, and some of us, we may not know. Did you imply directly or indirectly something about Coop Cyprus Bank? You can provide answers to us. And as far as the Cyprus Coop Bank is concerned, there are various questions that you expect to get some answers tonight from Mr. Hadjiyiannis. Where do we stand right now? What is the future of the Coop Bank here in Cyprus? Do we expect this company, this banking institution, to be in business in a year or so from now? And how likely is it that it's not going to be in business? I don't know the answer. Nicola is going to provide some answers to us. There are several questions. I'm sure you're going to raise some of those. Last but not least, I would like to sincerely thank the sponsors of this event, KPMG and Politis newspaper. Right now, I would like to give the opportunity, and I'm going to call on the stage the rector of the university, Mr. Konstantinos Christofidis, for welcoming remarks. Thank you.
Kalispera, good evening. Your Excellencies, Member of Parliament, dear ambassadors, High Commissioner, ladies and gentlemen, distinguished guests, dear students. It is a pleasure to welcome you to another interesting discussion organized by the Faculty of Economic and Management. Welcome at the University of Cyprus, the most dynamic organization of the island. Today we host at the university the Chief Executive Officer of the three Cypriot banks, and we have the opportunity to interrogate them. Is our banking system still too big to fail? What were the Cypriot banks' management actions since 2013, since the haircut, to minimize their vulnerabilities? The same interrogation took place last year, so I'm eager to listen how the banks responded to the challenges and opportunities of the Cyprus banking system, which were the topic of discussion then. The development regarding the Cyprus Cooperative Bank will be at the center of the discussion, Mr. Hadjiyiannis. This is true. As well as what are the rumors and what are the facts for the new era the bank is entering. No doubt, the non-performing loans are the major difficulty banks in the economic phase. How do the banks effectively respond to the challenge? How can the confidence of civilians be restored towards the banks? This is another question. The 2013 bail-in was a shock. I know it personally. Dealt with extreme public maturity. Today we have to proactively think and act in order to avoid such events from happening in the future and in order to stride towards development and growth. We need to be part of the developments, not just follow and cope with them. We must always be alert and plan for tomorrow. Opportunity within the banking system may only occur if we invest in a new economic architecture, model where innovation, research, knowledge, and excellence, where technology and green mentality play the main important role. Today, we need to focus on taking part in the new world that is growing. We need to acknowledge our problems, learn from the mistakes of the past, find our strength, and invest on them in order to provide the young generation the future they deserve. I'm confident that Mr. Matsis, Mr. Hourican, and Mr. Hadjiyiannis, welcome, gentlemen, intervention will be informative and provide knowledge regarding the current and future challenges of the banking system. Now a few words in Greek. 2013. Ο προϋπολογισμός του Πανεπιστημίου ήταν τότε 96 εκατομμύρια ευρώ. Και στις 18 του Μάρτη πληροφορηθήκαμε ότι θα ήταν πλέον 65 εκατομμύρια ευρώ. Έπρεπε ουσιαστικά να τη βγάλουμε με περίπου 30 τόσα εκατομμύρια λιγότερα. Ξέρετε, ήταν η μεγαλύτερη ευκαιρία που είχε το Πανεπιστήμιο. Γιατί ακριβώς εκείνες τις μέρες σχεδιάσαμε το πιο δυναμικό πρόγραμμα που είχε ποτέ στην ιστορία του το Πανεπιστήμιο Κύπρου. Αυτή τη στιγμή επενδύουμε στην Πανεπιστημιούπολη 300 εκατομμύρια ευρώ. 200 εκατομμύρια από δάνεια των Ευρωπαϊκών Τραπεζών και 100 εκατομμύρια κυρίως από δωρεές. Φτιάχνουμε λοιπόν το νέο πανεπιστήμιο. Τα προγράμματά μας έχουν μια εντυπωσιακή ανάπτυξη. Χθες ανακοινώθηκε το νέο ranking της Ευρωπαϊκής Ένωσης σε σχέση με την προσέλκυση ευρωπαϊκών προγραμμάτων και με τους αριθμούς που διαθέτουμε σε επίπεδο αριθμών καθηγητών, είμαστε και πάλι φέτος οι πρώτες στην Ευρώπη. Άρα λοιπόν για μας η κρίση ήταν μια μεγάλη ευκαιρία. Δεν κάναμε αυτό που λένε οι πολιτικοί, ότι η κρίση είναι μια ευκαιρία, εμείς το κάναμε. Κερδίσαμε αυτό το στοίχημα και ελπίζω, κύριε Κοσμήτωρα, του χρόνου αυτή η συνάντηση να γίνει στην μεγάλη μας βιβλιοθήκη. Σας ευχαριστώ. Thank you very much.
Thank you, Mr. Rector. Right now, we'd like to call on the stage the CEO of the Bank of Cyprus, Mr. John Hourican, for his speech.
Good evening, everyone. It's a year since I've been in this room, and it's nice not to be completely the center of attention today. Let me start with, we've been told we have about 7 to 10 minutes of remarks and that you guys really want to get on to questions. So I'll cover the themes by talking a little about the macro, a little about the banking system and the challenges, and then what I think some of the policy response should be. So I'm unusually going to try and stay to the topic that is on the screen. And I want to start with just a couple of big points. You know, we talk about have we been making progress in NPLs. I think it is fair to say the country has been making progress, and certainly the Bank of Cyprus has been making progress. 3.2% GDP per quarter for 11 quarters, reduction in NPLs at the Bank of Cyprus. That's going some. That's going some by reference to any benchmark of any country in the Eurozone or the wider Euro area. We should be proud of it as a country, but unhappy that we still have huge NPLs to go. And I'll come back to this topic later on in my remarks. We've also, and I think it's an important point, repaid emergency liquidity assistance funding of 11 billion. We now sit with nearly 6 billion of liquids on our balance sheet 4 years post a crisis. That is not something you would have put your money on 4 years ago. You would also have not expected us to take our balance sheet down from an excess of 30 billion in size to today about 23 billion. So we have been contracting the bank painfully. We have been repairing some of the, what I would describe as excesses of the past, and I'll choose my words gently. And we have been recovering from some of the tourism that our business embarked on in expansions around the world. Today we have a Cyprus business supporting a Cyprus economy, trying to create the opportunity for the wealth creation in the new jobs market in Cyprus. That's our job. That's what I see the job of a systemic bank in Cyprus to be, and that is the mission that we have set out to try and complete. If you look at the macro in Cyprus, Cyprus has been performing very well. Very few economies post a dramatic crisis such as the one that happened in Cyprus have been able to recover at the speed at which Cyprus has recovered. And that should be taken in the context of an economy that was capital controlled, both internationally and domestically, and one where the confidence of the banking system was fundamentally destroyed by the bail-in of depositors to the tune of about 50% of GDP. These conditions in many economies would not have given rise to the platform for a 1,200-day recovery. And I think that Cyprus as a society should, while not applaud itself, should be pleased with the mature response that we collectively have done to the crisis. But there are issues in the economy, of course. You know, it is good to see that debt to GDP for the government is below 100% at today, so about 96%. It is good to see that the government funding is in surplus in terms of its budget, the way it funds itself. It is good to see that the discipline through an economic and a parliamentary cycle has been maintained, and it is good to see that some of the reforms that are necessary to make this country a success in the future have been put in place. That's not to say that the job is finished. There is much more to do. NPLs are still high. You know, near 20 billion of NPLs for an economy that is less than 20 billion in GDP is still world leading, despite the fact that we've been making progress on reducing it. There are lots of winds in the air, most of which are blowing in our face, not on our backs. You've got trade protectionism. You've got an EU reform agenda that has its dangers for a small country like Cyprus. And the politics of that being put in place for a small country need to be kept on our radar screen. We will have the ultimate unwinding of QE when it happens, and how that will impact, you know, the investment opportunities for those that might wish to invest in Cyprus. You have the regional idiosyncrasies that exist around this island, both in the Middle East and indeed in other near neighbours, where we have to keep a very close eye on what that means for our product, our greatest export, which of course is our tourism and other aspects of the economy. We have to recognise that the world as a whole is very overborrowed. We're at about 90% of GDP in the world in terms of borrowings. That's a peak which hasn't been seen since dangerous points in the last 100 years. And we have to be alert to it. Debt in the world is very, very high. We have to recognise that Europe has taken 4 to 5 years longer to deal with its debt problems than the EU, than the US, or indeed the UK. And this is placing pressure on time on a small economy like Cyprus to get its act together. That's despite the fact that Cyprus's crisis happened 4 to 5 years after some of the crises that occurred around Europe. That's an inconvenient truth, but we should face it head on with the policy actions that we need to take now. The speed at which we delever our non-performing loans will be an important factor for this economy's continued success. And I think it is really important that we face this as the first and significant challenge to the banking system in Cyprus. I gave you the statistics of positivity at the beginning, but when I sit today still with 8.8 billion of NPLs on my own balance sheet for the Bank of Cyprus, even though it is down from 15.2 billion at the height, and even though it is covered in excess of 50% by our equity in terms of provisions, that presents danger for this country, because we need to move that on back to cash, reduce the capital against it, and put that capital to work in lending to this economy so we can create wealth for the businesses and the people in the country. And that's why you'll hear bankers talk about NPLs being an important component of the redress that society needs to get behind. It's because that stock of NPLs is stopping the success of the country. It's stopping the creation of wealth. It's stopping the creation of jobs. It's embarrassing the country on a national stage against comparison of others in the club in which we are part. It is very important, ladies and gentlemen, that we set out to properly and once and for all put the conditions in place in this country to address it. The households in Cyprus continue to be heavily indebted, and I think we would all recognise that in the banking sector. The household debt as a percentage of GDP is about 110%. This is very high by reference to any standard in any Western democracy, and we need to recognise that that stress exists, and we have to recognise that the politics of making sure there's protections for vulnerable groups is in fact real and addressed by the banking sector, but openly addressed in dialogue between us and the legislators. And I think that that is not difficult to address, and I'll come back when I talk about the policy actions and what we need to do to really make progress on that. But we shouldn't shy away from the fact that there are people who are significantly over indebted, who have lost income during the crisis or indeed lost their livelihoods, and that we collectively have a responsibility to ensure that we do what we can to help those in order to ensure that we can attack the residual amount of debt, which is those that perhaps could live in a smaller home, or those that are strategically defaulting, or those that are just not bothering to engage to find a solution to move this problem on. Now, these are easy words to say and difficult to ensure that we get all constituencies together to achieve an outcome that works for everyone, but I think it's essential that we do. We also need to recognise that the industry of banking is challenged heavily by technology. It's challenged heavily by paradigm shift. I think when I was here last year, we talked about the iPhone. The iPhone's 10 years old. The smart technology is 10 years old. You have a bank in your pocket now. You have an encyclopedia in your pocket. You have your mother in your pocket on video if you really want to. I was told, though, that until I have my mother-in-law in my pocket, I'm not truly Cypriot. This was told to me by the finance minister. We have to address this. It suggests that the world around us is changing, the way money moves is changing, the digitization of the economy we're in is changing, the addressable market we operate in is changing, and therefore the manner in which we serve it and address it through the channels we have, we need to be clear that we address that properly. So it is not appropriate to think that branches in the manner in which they've always been will be the same. It is not appropriate to say that the labour organisation around our business model can stay the same. It is to close our eyes to this issue if we don't address it. It is my view that we need labour law reform, and we need to attack in a sensible and organised way the way in which our cost structure and our industry is organised. And that leads me to another thing. There are 12 banks in Cyprus in an economy with less than 1 million people. This is a very large number of financial institutions serving a modest economy. And we do need to address, I believe, consolidation in the banking sector. We also need to remember that the liquidity, despite the fact that you had huge liquidity destroyed during the crisis, that liquidity is now abundant in this economy. Now, that's a testament to those that save. It's a testament to those that have taken the hard choices. It's a testament to the system that it's been able to attract Greek deposits or overseas deposits, or indeed deposits back from Cypriot residents. But that liquidity places pressure on margins in new lending, which in turn places further pressures on business models. So banks sit here today with significant pressures on their business models, significant available liquidity which needs to find a home in an over-indebted economy. And of course, they also face the high NPL challenges which come with the attached supervisory and regulatory pressures to get the job done faster. These are the conditions that the banking sector in Cyprus exists in today. And we must very clearly and very carefully address them. They are also coupled with compliance challenges. I doubt Mark Zuckerberg woke up at the beginning of March and thought he'd be called in front of the Congress to explain why his data had been used by a company that had used an app in Facebook out of Cambridge to try and influence the democratic process. Data, GDPR, all of the things that are coming to bear in compliance in the wider sense on financial institutions and businesses more generally are acutely in banks. The politics of countries' relationships with each other impact Cyprus. You have a very strong relationship with our northeastern neighbours, Russia and the former CIS. This presents an issue and explanation in Europe and across the world, particularly at a time when you see diplomatic moves which are not favourable to one of our friendly countries. These challenges present themselves in economics, in the banking system, and in compliance in the banking system. And those of you that have heard me speak, you know I'm genetically programmed to talk, so I'll stop talking shortly. I want to talk a little about policy, for just a couple of minutes. All of the things that I've addressed and that I've mentioned are not new things to any of you. They are not new things to our legislature, they're not new things to our government, they're not new things to business, and they're certainly not new things to the people who run banks. And they need further help in terms of the policy agenda. The first thing is, of course, we need to protect some of the vulnerable groups in society, but let's get it done properly, let's make it clear, and let's get it out of the way of solving the rest of the problems that society has, which is a huge stock of NPLs. We need to put in place some acceleration foreclosure legislation. We need to put in place a package which allows a more lubricated access to collateral in order that we don't allow value leakage from this society in the resolution of NPLs. And that is it is an incontrovertible thing that if you want your economy to succeed, you have to allow the passage of delinquency quickly. We need help from our legislature, from the government, to try and ensure we put in place things such as collateral legislation, such as enablement of securitization and a variety of other modest pieces of legislation that I do not think are controversial in the context of a vulnerable set of individuals already protected. So this is my first policy requirement. After that, look, I think we need to make sure that the policy agenda recognizes the emergence of digital as the key driver in a forward-looking economy. We need to ensure that we embrace it. We need to ensure that we legislatively embrace it. E-signatures, the ability for e-commerce to work well in Cyprus, broadbanding the nation, encouraging entrepreneurship, incentivizing the digital economy to bring it here so that we can increase the addressable market that is Cyprus's business's opportunity beyond the boundaries of the island, the physical island that is Cyprus. And I think that's an important policy objective. We need to, and many of you won't like me saying this, but we need to embrace regulation. I've gone grey embracing regulation, but we must. It's coming, it's getting harder, compliance is going up, regulation is here to stay, and we as the systemic banks have no option but to embrace it and make sure that we are a virtue in how we present ourselves in terms of compliance against it. Because to resist it is merely to buy a short amount of time. And that's, most of my colleagues in the bank will be walking home depressed saying that, but this is the reality of where we are. The other thing, and last thing I would say one thing which is an important point is we know we are putting pressure on some of the infrastructure that is Cyprus. So the land registry at quarter end, because all the banks are driving hard to try and get deals done to make sure we can show progress. We put enormous pressure on certain aspects of Cyprus's infrastructure. And we need to ensure that any policy objectives reflect the need for volume through that infrastructure and modernization of that infrastructure. So again, we need to make sure that the policy objectives of government reflect that. We need to make sure the policy objectives of government reflect the modernization of the workforce and the practices of our workforce so that we can be an attractive place for new business to come, so that we can bring that 11% of unemployment down to a more natural level. And lastly, I would just say we need to embrace more collectively the need to bring Cyprus out of what is described as a weak enforcement regime into one which actually encourages capital to come here safely and investors to want to do business in Cyprus. We have to have a business-friendly, fast, liquid environment in which Cyprus can succeed. And I think if we do that, the banking sector will deal with its problems rapidly, and Cyprus's economic growth rate can be improved even beyond the success of today. Thank you very much.
Yes, we do need a business-friendly, liquid environment here in Cyprus, and it's going to help all of us. Thanks, John, for the excellent presentation, easy to comments, and very nice policy implications that you discussed. Right now, we'd like to call on the stage Mr. Hadjiyiannis Matsis, CEO of Hellenic Bank.
Honorable guests, colleagues, ladies and gentlemen, friends. So, risks, challenges, and policy implications. I would also like to have seen their opportunities. There is challenges that we are called to navigate, but there is also opportunities for us to look forward to in the banking sector in Cyprus. Now, NPLs, everybody's talking about NPLs. Here's a very interesting statistic that I saw the other day. Deposits in Cyprus in 2000 were 18 billion. The banking sector in Cyprus had 18 billion deposits. That was a bit more than 100% of GDP. By 2010, those deposits rose to 75 billion. That's a 500% increase in deposits in the banking sector in Ireland over the course of 10 years. That's staggering. Why? A lot of these deposits came from the Eastern Bloc. Part of it was a generation of wealth in the Eastern Bloc with perestroika and all the changes coming forth, the bilateral tax treaties of Cyprus, the low taxation on the island, and the European stamp of approval that Cyprus gained in 2004 by entering the European Union. These rising deposits led the bankers to extend loans. So the loans went from 18 billion to 75 billion, also 500% increase. Loan to deposit ratio of 100%. Now, that type of growth cannot, it's not sustainable anywhere. And therefore, the rise in lending led to a loosening in lending standards, going down the risk spectrum, and an increase in the non-performing loans on the island from 5 billion to 28 billion, 150% of GDP. That's first in the world. We've never seen this before. 2013, we got a slap. The whole banking sector woke up to the magnitude of the problem that we faced. But since then, we are making progress. Quite surprisingly, in a very short period of time, the economy turned around. We have now recorded 3 years of growth, 4% growth, one of the highest growth rates we have in Europe. And the banks are learning and are taking steps that lead to a reduction in the non-performing loans. In our case, for example, we started using all the toolkits that we could see in our disposal, managed to form the first external debt servicer, non-performing loan servicer on the island, and therefore managed to put a process in place through the external servicer that significantly helps in the reduction of the non-performing loans. We have a lot of tools in the toolkit that we are using. We have the sale of loans law that the government has passed. We used that, and we sold non-performing loans to external investors that came from abroad that started getting interest in investing in non-performing loans on the island. So we have a lot of challenges but there is also opportunities. Where is perhaps the biggest opportunity in the NPL area is the level of provisions that we have managed to take as banks to shield us against the risk of these non-performing loans not paying. For example, in our case, we have 60% provisions against the non-performing loans. That means if I have a €100 non-performing loan, 60% has already been provided for, and I'm recording it on the balance sheet at the value of 40 euros out of the 100 claim that you have. Against that, there is collateral. Most of the loans given in Cyprus are collateralized, have been collateralized loans, and that collateral has not deteriorated in value by as much. For example, in our case, that I know the numbers, the value of the collateral in the 40 euro loan that is recorded on the balance sheet is 55, statistically average. That's 136% coverage. Are we there? Perhaps we are. We are now resolving loans at net valuations that exceed the net book values that we have on the balance sheet because we managed to liquidate the collateral using the tools on our disposal, the foreclosure law, the insolvency framework, the sale of loans law, to actually reduce the problem without incurring additional provisions. So there is a challenge, there is opportunity. Second big challenge of the banking sector, the AML, anti-money laundering, KYC, know your client, KYT, know your transactions. A lot of the deposits that I talked about earlier that we accepted from 2000 to 2010 came without international best standards of governance around how you accept these deposits. We were not operating proper, know your client, ensure that the deposits are of decent origin and low risk. That unfortunately has caused a very big stain of the Cyprus banking system, and as you can see from a lot of articles about potentially Cyprus being involved in anti-money laundering triangles between various countries. That is all in the past. That is mistakes that we have learned from. On hindsight, it's easy to see. At the time, it was a cultural issue. We accepted these deposits. We didn't know better. But the last 3 years have seen a substantial shift across the banks, definitely in our case, by improving governance to best standards for AML KYC. So we are there. We are there. Of course, the articles that relate to past practices do not help, and that's a big challenge, but it is also an opportunity because we have tightened our governance, and as John also said, it's time to ensure that we have best standards here so that we can be recognized as a credible country and credible banking institutions in order to be able to do international business. So a challenge, but also looking forward now, an opportunity. Overbanking, the third largest challenge that I see in the island. 13 credit institutions we have on the island. 850,000 population, 19 billion GDP, we have 13 banks. Any metric you see relative to European standards, we are number one or number two between Luxembourg and Cyprus, but Luxembourg is a completely different model of banking that they follow. Banks, population per banks, we are number one. Population per bank branches, we are number one. Population per bank payroll, we are number one. This country is significantly overbanked. That today is a challenge. Why? We have the overbanking leads to a lot of competition, and therefore the lending side of our balance sheets suffers from low standards, low lending standards, because there is 13 banks with ample liquidity competing to give loans. What happens to your lending standards? They deteriorate, and we need to be very careful on that. It also leads to a high deposit base, high deposit cost, because all these banks compete for deposits. So you have low lending rates, high deposit cost. That means low margins for the banks in Cyprus. A challenge, a big challenge, but an opportunity looking forward. It will consolidate. In 5 years, there will not be 13 banks here. So that will lead to a repricing of the loans upwards, an improvement of the lending standards, a repricing of the deposits, deposit rates downwards. Therefore, net increase of margin for those banks that remain. That will be the result of the consolidation of all the banks together. So, crisis, challenge, but also a big opportunity for banks that operate on the island. The fourth large challenge that I see is the unionized environment. In fact, despite the fact that there is 13 institutions and you would expect at the very least low costs given the competition, that is more or less forbidden because of the inflexible labor law and very strong unionized environment that we have across the banking sector. That is changing. There is the unionized environment also creates very distorted salary scales across different types of staff, very distorted relative to what you would expect to see in international, in best standard banking. However, that is changing too. All of us, banks, employers, employees, also the union, I believe is coming to the conclusion that we need to see the future differently. We need to embrace technology. We need to accept outsourcing, something that hasn't been accepted by the unions. And we need to introduce meritocracy, proper performance assessment, so that banking staff can feel empowered, accountable, and rewarded in order to be able to move forward. So it's a challenge. It has been a big challenge. It created big distortions in the market, but again, we are at an inflection point, and this will not continue anymore. It will change. The unionized environment will reduce, and therefore that again creates opportunity for further margin by the banks reducing the cost base. How do you reduce the cost base? Not only by, of course, increasing your productivity, but also through embracing technology, which is happening, as you all know very well, on a daily basis. All the banks are moving digital. We are all investing. We are investing in a significant way in mobile applications, internet banking, etc. And that technology, adopting the technology, will enhance the product, will reduce the cost, together with a less unionized environment, creates an opportunity again for the banking sector. Regulation and legislation, another big challenge. We have the regulators breathing on our necks, rightly so, for our very big stock of non-performing loans, for the requirement to upgrade our anti-money laundering, know your client, etc. procedures. We have legislation hitting us from all over, Payment Services Directive 2, MiFID 2, GDPR, data protection, etc. These introduce a big cost and present a learning challenge for all of us banks. However, this legislation and the regulation also improves our governance. And for Cyprus to regain its credibility internationally, it does need significantly better governance. And I'm afraid, even though I don't like it, because of the costs that is coming through the increased regulation that we have, which was very much needed, because this increased regulation, a lot of it is coming from Europe is actually changing our culture and makes us understand locals, understand how to conduct proper business and proper banking in order to be accepted internationally. So these being the main challenges, but also opportunities that I see ahead, given that we have learned our lesson, upgrading our standards, introducing technology, tackling employment issues head-on, tackling non-performing loans head-on. The future looks good for the sector, so long as we continue on this path of constant change, committed to make it happen. Thank you very much.
Thanks a lot, Mr. Matsis, for the insightful comments as far as challenges and opportunities. We do agree that better governance will lead to better credibility and will improve, not only the banking sector, but the economy of Cyprus. I would like to call on the stage right now Mr. Nicholas Hadjiyiannis for his speech.
Good afternoon, everybody. Kalispera. I'm not going to follow the script. I think that both John and Yannis covered the major issues that the systemic banks they face in Cyprus. What I would like to do is to make an analysis of what changed since last year, a year ago, since we had this presentation and this discussion. In these last 12 months, definitely the banking system in Cyprus improved. Both the banks, the three banks, they have managed to reduce their NPEs. All three banks, including us, came out with significant cooperations with independent NPL managers. That's a major improvement. This was something that the regulators had been asking for quite some time, and this is what happened. So we have Piper, we have APS, and we have Altamira in the island. This is extremely important because this is facilitating an improved performance and also independence. So this is a key element for the resolvement of the NP issues. What else have we seen since last year? We've seen increased client confidence. This has been translated into increased demand for new lending. So all three banks saw significant increases in new lending. At the same time, regarding the COP, what we've seen is that we have made a very significant change, a very significant transformation. A year ago, we were not one bank. A year ago, we were still the cooperative credit sector. Today, we are one bank, one legal entity. At the same time, compared to last year, we have managed to have a unified banking system. So we have managed to merge 19 different databases and banking systems into one. So regarding consolidation, what we can say is that in 2013, at least on the COP side, we had 94 standalone banks. Today we have one bank. So regarding statistics, in 2013, we had more than 100 different banks. Today we have 13. So that's a major, major improvement. Is this enough? I dare to say that we still have a long way to go. Why is this? Because we are part of the Eurozone. And at the same time, we have a banking union that is developing. So we have a common currency, we have a very, I would say, prudent and quite strict regulator that they want to de-risk the system in order to facilitate banking union. How do they de-risk the system? All the banks, they have to more or less operate in a very strict and well-managed environment regarding their practices, their governance. At the same time, they must have inadequate profitability in order to face the challenges and the risks. And they need to de-risk their balance sheets. In Southern Europe and in Cyprus, we still have significant risk in our balance sheets due to the NPEs. The NPE balance has been reduced. In the case of our bank, we are down by 20% from the peak, and half of this increase was achieved since September 2017. Is this enough? No. What we need to do is to continue the pace. We have to continue the pace because we have the NPL managers. There are significant provision coverages in the system, and the banks, they have adequate capital. In the case of my bank, we have 2.9 billion of provisions and 1.1 billion of capital. So we have 4 billion of availability versus 6.2 billion of NPEs and almost 5 billion of performing loans. The more provisions we have, the better it is. But at the same time, in Cyprus, the banking system had been lending based on collateral. So there is a significant stock of collateral against these loans. In the case of the COP, for these 6.2 billion of NPEs, we have collateral, unrestricted collateral, 10 billion. So there are mortgages and memos on 10 billion worth of property, retail property. At the same time, though, if we restrict this, if we restrict the value of the collateral to the value of the loan, that goes down to 75%. Adding to that percentage our provisions, that goes to 120%. So things have improved significantly in the last year in Cyprus. But the pace has to continue in a more dynamic and efficient way. What 2018 brings, at least for the COP, it is the end of its restructuring plan. For us, the Troika and the Memorandum of Understanding and the support program, it is still here. Even though the country moved out of the program in March 2016, we still operate under a restructuring plan that was put into place in order to facilitate the recapitalization of the cooperative credit sector in 2013. That was a 5-year restructuring plan ending in 2018. We are in the 16th review by the European Commission. So we still have the quarterly visits by monitoring bodies in order to assess the fulfillment of the restructuring plan. The obligations and the commitments under the restructuring plan were done. There is only one left, the privatization of the bank, or rather the exit of the state. So we are now in the process of attracting private capital, either as a bank or attracting investors that they will take the decision on how to invest. Since this is a small place, it's a small economy, we're part of the Eurozone, the capital has to be attracted, it is international investment capital. Therefore, it is a fact that decisions and return on investment will be taken by the international investment community. So in the case of the bank, we have stepped into this direction through a transparent and international process, targeting the international investment community, managed by one of the biggest investment banks in the world. We have repeatedly said that the Cypriot banking system, due to it is oversized, there is a lot of competition. The fact that the interest rates in the Eurozone are low, it is creating issues of profitability, And the situation due to the increased competition in Cyprus, it is magnifying that. So we are not dogmatic about it. Actually, we are pragmatists about it. Therefore, there is a need for consolidation, and there is also a need for improved productivity. Even though the banking system has improved significantly since 2013, significantly, still we need to proceed with structural reforms. The risk and capital management framework has been improved, provisions, NP management, capital adequacy, technological systems, everything. But productivity, it is still not up to the standard. Therefore, we must dare to do structural reforms. In the case of the cooperative bank, we have reduced costs by 20% since 2014. 20% might sound quite high, but at the same time, we have seen that the Cypriot banking system has lost significant income due to the fact that it is managing and reducing its NP stock. And at the same time, we've seen lending rates that for the first time, they are compared to the lending rates that exist in more competitive and advanced Eurozone countries. Therefore, costs have to follow the reduction in the generation of new income. So these are the challenges. Regarding policies, we are a small country. We don't influence the decisions. And therefore, we have to be, again, quite pragmatist on the way forward. We have to keep the system stable, and we need to internationalize even more our banking system. The way to do this, it is through the attraction of international capital, institutional investors, and improve our governance. I will conclude by repeating again that only with the finalization, the completion of the restructuring plan of the COP, it will be the end of the 2013 support program for the country and for the banking industry. Thank you very much.
Thanks, Mr. Hadjiyiannis, for the insightful comments. Very, very interesting. Definitely, the banking system has improved substantially since 2013. You as CEO and the board members of Co-op Bank, you work very, very hard in order to improve, the Co-op Bank. Was it enough, not only for Co-op Bank, but also for Hellenic Bank and the Bank of Cyprus? And right now, we'd like to give the opportunity, to all of you to raise any questions you may have. I know all of you are eager right now to raise your questions to our distinguished guests. And we apologize that we don't have much space for all of you and you have to stand. Let's hope next time we're going to have a bigger auditorium, Mr. Vice Rector and Mr. Rector, to accommodate all those people. Questions?
We need a donation for the funds.
Anyway, questions. Please tell us your name. Anna Pavlidou.
I was wondering how the banks are planning to deal with the possible oversupply of the collaterals now with the enforcement of the foreclosure law.
Okay, thanks a lot, Anna. Another question? Yes, your name?
Hi, my name is Panos Stylianou. Thanks for that insightful sort of speech by all the three CEOs. My question is more around sort of models. The question is, are you sort of focusing on a more core retail business model, or are you also looking to expand more at the universal business model, including sort of wealth management, investment banking? What's your view in that? Thank you.
Okay, thanks a lot, Panos. Another question? Okay, your name, get the microphone so we can hear you.
Hello, Andreas Dimitriou. First of all, I want to thank all three CEOs for very interesting talks. My question has to do with macroeconomics. And specifically, it seems to me that median wages are either, especially for the young people, are either stagnant or rising very, very slowly. And it appears that the real estate sector and lending in the real estate sector is stuck, not only because of that, but because also there's lots of people who are waiting to sell because they think prices are going to go up. And so my question is, do you think that in the end, growth is going to come along and we're going to see both median wages rising, real estate prices rising, and people being able to afford these higher real estate prices and buy homes, essentially? Or are we going to have a sort of mini real estate bubble and things are going to get to where median wages are right now? Thank you.
Okay, thanks a lot, Andreas. John, would you like to answer those questions?
Sure, I'll give it a go. Look, so the foreclosure processes that have been in place are only yielding a modest level of real property foreclosures. We've been certainly careful about how we've gone about using the foreclosure legislation. And in fact, given its delay in implementation and then the 20 months between the ability to use it and the first time when the bank can bid its own debt, we're only now beginning to see the collateral come through. The statistics around the sort of change of ownership of collateral at the land registry are not suggesting that the foreclosures that will be done by banks are going to cause any particular oversupply on any particular part of the property ladder at this stage. But it's something we need to keep a very close eye on. That's the answer to the first question. The second one I'd just say on business models is, of course, when we have a universal banking business model, we have an international business unit that produces near 200 million of revenue. We have a corporate banking business that is sizable for the island. It does more than 50% of all the corporate lending on the island. We have a retail bank that does its fair share of lending, 30% of retail market share. And of course, we have a wealth management idea. But actually getting wealth management to work on the island requires a wealth on the island to be available to put into wealth management on the island. And that's work in progress, I would say. But what we'd love to do is start to see some of the excess deposits on the island be transferred into a more sort of long-term wealth management type of product. And we're working on that, but it's not yet making us, in my view, enough money. And then the last thing I'd say on macro is, look, the real estate sector is expanding slowly and sensibly in terms of price action. There are issues in terms of the wages in households in Cyprus. There was a 13%, I think, reduction in the household income in the average household in Cyprus at the date of the crisis. There's really only been one replacement cycle in terms of wage increases, so we continue to see stress in household earnings in Cyprus as a whole. And of course, therefore, there are affordability issues in Cyprus households on property. Now, we'd like to be lending into new homes. We'd like to be lending to first-time buyers. We'd like to be able to make sure that the lending contract we enter into with new buyers is one that can be enforced in the fullness of time when we have cleared the stock of NPLs. It is unhelpful that there are natural thresholds through the way in which the law can be used and the politics of protection. That means that we have to be cautious about lending to the bottom end of the housing ladder. So all of these things are connected, but I'm optimistic both for price expansion and indeed for wage expansion, subject to my policy help coming.
Thanks. Yannis?
Sure. The first issue on supply of property. It's the answer to that is time. Let me tell you that in 2017, 8,700 properties were transacted on the island. 8,700. Now, just to give you an idea, the collateral that the banks have collateralizing non-performing exposures is in excess of 60,000. So that alone, it's 8 years of the volume of today's land registry transactions. In order for the banks to be able to reduce the NPLs at the pace that they are forecasting, assume that over the course of the next 4 years, you should see in excess of 50% reduction in non-performing exposures from today. You do need to manage, you need the time, you need the years in order to manage the supply carefully and ensure that you don't cause oversupply and therefore a collapse in property prices. At the same time, there is other tools, such as the sale of non-performing exposures, where another manager, investment manager, not the bank, comes, buys the non-performing exposures to resolve in the depth of time, because for them, because you are not regulated, they don't have the pressure to sell property at the speed that the banks have the pressure to sell the property. So net, you need the time, you have tools. I believe it's manageable. 2017 has shown that it has been manageable. Together with a growing economy, given time, the banks will be able to reduce the non-performing exposures via sale of collateral without significant pain. Remember that there is a lot of provisions against the non-performing exposures. As I was saying earlier, for Hellenic, we have the value of the collateral is 136%, the value of the non-performing exposures. Therefore, you can sustain a haircut as well without incurring additional losses. With regards to universal banking, I think in Cyprus you do need to have more or less the full spectrum of product to distribute to the client base. A bank cannot just do loans. You need to be able to give more product like trade finance, factoring, payments, wealth management, and therefore, in order to complement the interest income that comes from loans with fee and commission income that comes from other banking product that can be distributed to the client base. Therefore, I think definitely Hellenic is following a model whereby it generates different products, banking products, to be able to distribute. So you can call that universal banking, but it's not investment banking, right? So we're not veering into investment banking. I think that more or less addresses.
Thanks, Mr. Matsis. Mr. Hadjiyiannis.
Regarding, first of all, universal banking, I believe that Cypriot banks are quite handicapped regarding that because they do have a very high cost of capital. So that has to be taken into consideration. With no doubt, there has to be significant generation of non-interest income. This is the business model that it is being encouraged by the regulator. This is a business model that makes sense. Regarding Cyprus and wealth management, there is a sector. This is a sector that Cyprus as a whole it is primitive. I believe it could be the only country in Europe that does not have a mutual funds market. So actually, depositors, clients in Cyprus, they don't have a choice. I mean, they have a choice between a deposit and investing in property, or transferring the money abroad and making investments actually through private banks. So this is something that has to be done. This is something that has to be done today because it will provide optionality and opportunities and a choice to our clients, and it will only improve the economy and the marketplace. Now, regarding the foreclosures, we've seen that even though the success rate of foreclosures has been quite low, there is a significant statistic that 1 in 2 cases they are getting settled either through by settling the loan or through restructuring before they reach the auction date. So the foreclosures, it's not a solution, but it has been designed to actually act as a stick and to address the significant cultural issues that we have in Cyprus regarding our obligations and responsibilities in taking a loan. Now, regarding the real estate market, our analysis shows that there is a significant upside. So we do see property prices rising in the next 2 to 3 years, but it is up to the banks in order to manage to be able to fine-tune their policies regarding the management of collateral, and it is up to for the economy to continue growing at high levels.
Okay, thanks, Mr. Hadjiyiannis. Other questions? Yes?
Concerning the present...
Can you tell us your name?
Yannis Ioannou. Concerning the present situation of the banking system and the fact that we see a number of risks, are you happy with the portfolio of weapons that you have to deal with the major risk, which are the non-performing loans? I say this having in mind that over the 5 years, personally, I believe that we have improved confidence in the banking system, but lately, because of the exposure of the issue in press and the worries of people, the matter is becoming more pressing. So it has to be dealt with. I think 2 of the speakers have spoken already about the speed that we have to deal with the fact. Who is coordinating this effort? Thank you.
Thanks a lot, Mr. Ioannou. Yes?
Hello, gentlemen. My question is...
Your name?
I'm Christos Koumidis. My question is for collateral in the form of guarantees. We haven't heard anything about guarantees, either for physical persons being liquidated by the banks or guarantees from the government. Is any bank planning to liquidate those sorts of guarantees? Thank you.
Okay, thanks, Mr. Koumidis. Another question?
I want to ask Mr. Hadjiyiannis how he perceives improving the productivity when his colleague, when you departed to the airport last time here, he said that you brought together a lot of branches, but you were not going to make any redundancy, be those voluntary or compulsory, and on the contrary, you were going to increase the number of employees. And a certain other member of the panel at that time, which I will not name, was shaking his head. I mean, how did we not manage to increase the productivity since last time?
Okay, thanks, Mr. Nico. Okay, Nicolas, you can start.
I will start with the last question. Actually, productivity, it's a matter of output. So if we see the output of the bank in the last 12 months, it is translated in terms of new lending and in terms of NP management, as well as in terms of projects. We have seen a significant increase in productivity with the same personnel. So that's a very positive. That's a very positive development. But regarding structural reforms, in order to do structural reforms, you really have to redesign your business model in terms of your branch network and presence, and in terms of your product mix. And this has to be accompanied with technological investments. So at this stage, I believe that these things will happen in the privatization stage. These are significant decisions that have to be taken. If I may, Andreas, to proceed with answering the other 2 questions.
Okay.
In terms of the guarantees, that's a big issue for the Cypriot banking system. For example, in the case of the COP, I was seeing some statistics earlier on that we have something like 80,000 guarantors involved only in our what we call written-off portfolio. So in a stock of 1.4 billion worth of a written, mostly unsecured portfolio, we have 80,000 guarantors. So that's a big issue. Regarding the government guarantees, for the time being, the government has not defaulted on any of its guarantees. On the contrary, the loans that they have government guarantees have been the best performing part of the portfolio without any capital requirements as well. Now, regarding whether we have adequate tools for the NP management, there is room for improvement. So we see that there is a significant delay at the land registry regarding the either foreclosures or the change of ownership. So we need to improve not only the tools, but in the application, either of the framework or in the usability of the tools.
Okay, thanks, Mr. Hadjiyiannis.
Some of the tools we control, for example, establishing of external servicers, non-performing loans. For example, sale of non-performing loans, we control them and we are moving maximum speed to use them to help reduce the non-performing exposures. Some of the tools we don't control. For example, legislation. To be balanced, the government did a good job over the last period, 4-year period, to introduce legislation to help as tools to help the non-performing exposure reduction, for example, foreclosure and insolvency. However, to be balanced, a lot more can and should be done. That legislation that has been introduced had loopholes, not well thought of, the legislation. Those loopholes had to be addressed urgently, for example, the foreclosure law, in order to enable the banks to use the tools more effectively, but also the judicial system. Judicial system is not working, is not functioning on the island. You need 5 to 10 years to go through a proper court process. And that needs serious overhaul, together with establishment of commercial courts, arbitration, and so on and so forth. So more tools are needed by us in order to be able to help reduce the problem. But we are using the tools there as effectively as possible. So it's not...
Thanks, Yannis. John?
Look, I would, Yannis has said most of what I would say. I think we do need to improve the speed at which the banking system is able to get at the collateral. Because actually the idea that an external servicer will come and buy these loans and hold on to them for a long time actually just damages banking capital, because the price they pay you is unlevered equity return discounted. So actually I would prefer to have both tools available, the ability to sell, but also the ability for the banks to operate properly in their own economy to recover collateral at an appropriate speed. Because if we don't put speed into the process, we damage the capital in the banking system. So I think that's an important point. There is a package of discussions around how we improve the foreclosure laws in dialogue with the legislators. That it is important, I think, that the securitization law and the ability to split collateral and do various other things is dealt with rapidly. Because I think by doing that, Cyprus will signal that it's serious, and Cyprus can get on with finishing the job and minimizing the destruction of capital that will naturally occur with poorer laws. So I do think we have work to do. I don't like the word weapon. I think the word incentive would be a better one. But I do think we need to make sure that there are better tools available. Even though I think Yannis said that the tools that are in place, we've been using them and quite successfully so far. The point on collateral is, look, nobody wants to enforce a guarantee unless they have to. But you need to recognise that when you provide a guarantee, you are providing the basis for a loan. And the idea that providing a guarantee has no consequences is something that we have to deal with properly as we go forward. Now, I would say that anyone who has a guarantee and is concerned about it should come and talk to the bank. We will talk in honesty about an appropriate answer. And the bank is very rarely, in any circumstances where there's a consensual discussion with a borrower, enforcing heavily on guarantees that make no sense. So I think we just need to get a real dialogue, and we need to stop sort of waiting and hoping the property market's going to go up in value and hoping that banks will just disappear. It is really important that we put some speed into finishing the job on this. That's all I have to say.
Okay, thanks, Mr. Hourican. Other questions? Yes?
Hi, Andreas, Andreu. Main drivers of the growth the last year was due to passports and abnormal growth of the hotel industry. As banks, how do you manage this risk?
Okay, thanks, Andreas. Another question? Luis?
You've spoken about NPLs as
We can hear you.
Okay, good. So the question is, do you still feel that there are strategic NPLs in the system? What is the size of this problem? And what steps are you taking among yourselves as the largest institutions to deal with this problem?
Okay, thanks a lot, Luis. Another question? Name?
Hi, my name is Marios Charalambous. My question is not so much related to the management of the NPLs, which is the result of, as all three of you have mentioned, some bad lending practices in the past. So my question is more related to the day after the management of the NPLs. Could you please give us some examples of bad lending practices that you have identified and how you have corrected them in order to not face the same issue again? Thank you.
Thanks, Mr. Charalambous. Yannis?
Sure. Strategic defaults. Allow me to start with households. The top maximum NPEs on the island was 28 billion, of which 12 billion was household and 16 billion was non-financial corporations. 28 billion, 12 was households. Today, it's 21 billion, 11 is households, 10 is non-financial corporations. So the corporations have reduced non-performing exposure significantly, the households have not. 11 billion, against which 24 billion household deposits in the system. Now, does the state generally provide do they shield the household borrower? I believe they do. Does that create strategic default? I believe it does. Is the bank's responsibility to pursue social policy? It's not. We will be socially sensitive where we need to, but only in those cases. Otherwise, we are not here to pursue social policy. That can be pursued by the government. We have depositors that we need to protect. And we saw what happened in 2013. Those deposits were not protected. And the bank takes a deposit and gives a loan. And therefore, we need to ensure that we tackle head-on strategic default, but in general, we tackle head-on default, not only strategic default, I'm afraid to say. So, socially conscious, yes, we are needed, but we are not here to perform social policy, I'm afraid. The passport scheme and the hotels. Well, yes, there is passports and construction real estate. At least as far as we are concerned, we are reducing our exposure to construction and real estate. Having said that, I do not think that the growth in the economy is to a large extent because of the passport. The passports have helped, but the economy is robustly growing on a number of different fronts. Tourism, hotels, there is a lot of big-scale, long-term infrastructure projects on the island, like the marinas, the casinos, the golf courses, renewable energy plants, health, education. So there is actually quite a good tailwind to the economic growth, and it's not only passports. But bad practices, lending practices have been a lot to do with concentration in commercial real estate development, and that is something that, at least as far as we are concerned, we are actively looking to reduce in order to also introduce better lending practices.
Thank you very much, Yannis. Nicolas?
Regarding strategic defaulters, yes, we do believe that there is a significant proportion of strategic defaulters in our NP stock. How do we address that? A tool is foreclosures. So the banks, they have to show determination in proceeding with foreclosures in the cases of non-cooperation. At the same time, there is also an issue of how can the economy actually function when 1 in 2 is excluded from getting new credit. So that's a big issue. And also this shows the potential for further economic growth if we manage to normalize this issue. At the same time, in order to address each case, especially on the household side, that is regarding individuals, we had to increase capacity. And the way that we were doing this is through our cooperation with Altamira, in order to be able to examine each case on itself and assess whether that person is a strategic defaulter or it is a person that has really been affected by the economic crisis. Also, there is a big confusion in Cyprus between the ability to repay the full amount of the loan and also to repay the amount of the loan that you can really afford. So that is an easy excuse. I cannot repay my loan. That excuse is not really acceptable. Regarding a bad lending practice of the past, well, we are still suffering as a bank. We've seen amazing cases regarding such lending. And what I can say is that the new framework of providing credit, especially under the supervision of SSM, it has not only improved, it has been structured significantly. And when we are lending, that answers the question for hotels. This is based not on collateral, it is based on repayment ability. So we do stress the repayment ability and the income generating capacity of let's say, these corporations or even of individuals. And even in the case of hotels, for example, there is a new criterion of professional management. So this has improved significantly, but the small size of the Cypriot economy makes it quite difficult to identify any opportunities that, let's say, the other systemic banks have not.
Okay, thanks, Mr. Hadjiyiannis. Mr. Hourican?
Yeah, I'll be brief because most of the comments have been already made. I would agree on the economy, it's broad-based. We're not seeing any particular sector. I mean, we're seeing, of course, strong hotel growth, but it's across the board. There's a good opportunity for this economy to present a broad-based recovery. And indeed, the passports are not levered. So it is equity into the country, which delevers developers, which is positive for the country, even if what those passports are paying for property may in fact be higher than you might wish to pay yourself. But there's no debt in those. On the NPLs and strategic side, let me just, I'd echo fairly much what Yannis said, but I'll just give you some statistics from our bank, which I think which prove a point for you. We have 8.8 billion of residual NPLs on our bank. It's in our year-end disclosure, so this is not a market disclosure. Inside that number, there is 1.6 billion of fully performing, no arrears, restructured credit, which is still captured as an NPE. So the core remaining problem of the bank is 7.2 billion of non-performing loans at the core, and that splits pretty much evenly between SME, retail, and corporate. And the retail space being a third of it, 1/3 of that relates to what I would describe as the vulnerable group that need our help and protections. So 1/3 of 1/3 is what we should be protecting, and we should get on and do that protection so we can get on and finish the job on the rest, because that's what's holding a country back, and that's what we need society's help on. And the last thing I'd say on what we're doing differently, we lend against ability to repay. What happened in the past was there was a massive gorging on debt, which was fueled against the value of the collateral with no consideration of the ability to generate cash to repay. That is no longer what we do. Our job is to say, can you repay the debt? And show me the cash flows you'll generate. And if you can show me that, then I will think about lending you the money, and then I will think about it again on the cash, and then the cash again, and then I look at the collateral. It's a different mindset.
Okay, thanks, Mr. Hourican. I wish we had more time. Definitely there are risks and challenges in any financial system. Among those, the Cypriot banking system. There are, though, opportunities and several policy implications. And today we had the opportunity to have with us, three distinguished speakers, Nicholas Hadjiyiannis, Yannis Matsis, and John Hourican, who provided insights to all of us as far as, the financial system in Cyprus and where we're headed. Definitely, since 2013, there has been huge improvement as far as the financial system and the banking system in general here in Cyprus. And all three contributed substantially towards that improvement. My friend Yannis has been the youngest one. He's only been there for a year, and you're doing a great job, my friend Yannis, okay? He's a rookie. We had him here last year, the first day after he took the job, okay? And thanks to all of you for the great job you are doing. Definitely, a strong financial system leads to prosperity in that specific nation, and we do need a strong financial system here in Cyprus. I would like to sincerely thank all of you for being so kind. Several of you have been standing for an hour and a half. We apologize for that, but we thank you for being, so patient and for the insightful, questions that you raised, during the specific speeches. Last but not least, I would like to sincerely thank the three distinguished speakers for the excellent job that they have done once again, and we look forward to seeing them next year again. Before you leave, please do not leave. Give us 1 minute as a token, 1 minute as a token of appreciation. We have some plaques for all three of them to remember, this presentation. John?
Thank you very much.
Wait. Pictures of all of us, okay? Yannis? Nicolas? Anyway, thanks a lot. We have some soft drinks, some food outside. Let's take pictures.